Hello and welcome to another update video about Bitcoin. I would say we're getting into a decision area again. Next key decision point we're approaching. Again, here the view is that we are actually in a ending diagonal to the downside. That wave 5 here, which would also end the bear market, could be a three-wave pattern A, B, C. There are other counts possible, not denying that. This is a debatable count, but the choppy price action definitely, justifies it. And it would mean, or it does mean, that all of these waves in wave 5 have three waves, so A, B, C. It is a three-wave pattern, and then we have the A already complete, the B complete, and we're now in wave C. The wave C itself can be counted as diagonal. Again, due to the messy price action we have here, and we have in the wave C 1, 2, 3, 4, 5 waves. Within this wave C, or in this 5-wave structure, we are currently in wave 3. That's how I see it, highlighted there in yellow. And within the wave 3, we've got the red ABC in itself, because the wave 3 in itself is a three-wave pattern. In this case, at least we can count it like that. And then we have the bearish count would be the yellow count, that in the wave C of wave 3, we have the 1 complete, the wave 2. We bounced off nicely at the 19.5K level. I think that is where I made my previous video and put that target area on the chart here, in which we would most likely get into. I think we're nearly there, starting at 18,850, that area. And this would, I made you aware in the previous video, there's now two possibilities. Primary expectation, that would be as per the bearish count, we would ideally go down quite strongly now in a wave 3 through this area, to reach it, but go through it would with a very high likelihood confirm here this yellow count that we have on the chart. The blue count is also possible, unfortunately. It's a bit like no man's land in which we currently are, because we can count this move up currently nicely as a 5-wave move as well. So this could mean that we had, as I explained in the previous video, that we already have a bottom in place. Now we don't know that yet. I will really only start to believe that we have a more important bottom in place if we break above the $20,200 level. But this is a first indication that it could be the case. The reason for that is also that a lot of the other really good looking charts, they are currently they are bottoming. They haven't bottomed, but they are bottoming out at the moment, which means there is a potential that they are, reversing fairly swiftly or fairly soon, and Bitcoin could do the same. It is not an ideal pattern, and I really only start to believe it above 20,200, and we would then, in the further course of action, also break above 22,100. Until all of that is happening, I won't make a bullish count the primary expectation. But in the previous video, I showed you different scenarios, how it could unfold. Very important, what you just to simplify it need to understand, if we reverse in this green area, it will keep the blue count alive, and it could lead to a bullish breakout. That area is between the 18,430 level and basically here 18,850 roughly, or 870, plus minus a few dollars. It's not that relevant, but this is defined by Fibonacci levels. And I think we will get into this area, but here in this area we'll see a decision point. So ideally, as per the bearish count, we would just go through here. Bear in mind that a wave 3, as indicated here in yellow, will also have 5 waves, so there will be a bit of an up and down anyway. To simplify all of that, you need to understand that as long as we stay below 20,200, we remain focused on the current count. If we break out above that level, it could still be a bearish count, but it will probably mean a larger recovery before we come down again. Or it could lead to the bullish breakout, which I will find much more likely above 20,100 US dollars. Okay. Had a couple of comments in the previous video about, what's Elliott Wave's use really, if you have so many different scenarios. The point is, and I always try to bring that across in videos, and I know there are always new viewers who haven't seen those previous videos, but the point is that short term there is always the potential for messy price action. You don't always have conflicting scenarios. You typically have a bullish and a bearish scenario so that you can measure the risk. It has to do with risk management. If you as a trader don't know the options, how can you trade? Yeah. So that's one point. That is why I find the Elliott Wave method so useful, because it gives you very likely options, bullish and bearish, and if they are sort of with a very similar probability or they are very conflicting, then it might be best sometimes to stay away from a trade. And not everybody needs to trade all the time and every little wave. If you want to avoid the messy price action, you can just trade the larger waves. That's another option. But very important, the Elliott waves allow us to understand the charts that are reliable versus charts that are not reliable. I can tell you that the Bitcoin chart at the moment is not too reliable. There are conflicting scenarios, but it definitely isn't a chart that looks good from a bullish point of view at the moment. This will change above, for example, 22,100. Then we can consider that. But yeah, it does very importantly tell you the invalidation points, the Elliott Wave method, and that allows you to very accurately set stops, and it allows you to identify beautiful low risk, high reward setups. For example, after a 1-2 setup, you typically get a wave 3, which is the most bullish wave or the most bearish one, depending on if you're long or short here in an uptrend or downtrend. But these are sort of the setups that the Elliott waves help you to identify, and it certainly has predictive qualities as well, because if you have the count correct, it is the method that allows you to forecast prices and targets with the best accuracy. Of course, you never really know in which scenario you are, but there are probabilities and likelihoods, and you know that if certain scenarios are invalidated by going above or below a certain level, then it gives you a higher chance of knowing that you are in a certain scenario, which again allows you to forecast price targets very accurately. Yeah, so it is for me the method that can tell me very quickly if a chart has potential or not. Of course, it is not the only method I use. We use indicators as well, and in the background it's always worth observing some indicators. But again, indicators are always conflicting as well, and the Elliott waves allow you to define ranges very nicely. And here we have a very nicely defined range, $20,100 to the upside, and to the downside here that $18,400 level that I mentioned. Below that level we probably have that breakout to the downside. On the flip side here, 20,200, you could even narrow it down to 19,900. We have a breakout to the upside. So yeah, that is what the EW waves, the Elliott waves are for, really. So a very useful tool, probably the best to identify risk and reward in my opinion, and the best one to allow you to understand if a chart has potential or not. So I think next few hours will be interesting for Bitcoin, and we will probably know more in which direction we're heading. Focus continues to remain on the downside. That is the primary expectation. And I gave you the key levels here for invalidation. Okay, that's my update about Bitcoin. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, also check out the channel membership. Thanks a lot for watching. Bye-bye.